So, this is the nightly strategy podcast for Tortoise Capital, April 3rd, 2020. This is Ken speaking. Hope you all are healthy and wash your hands, stay off the beach. Be mentally tough. It's the early innings of this game. You know, the 1918 flu came around 3 times before the thing was done. So as bad as it's going to get, that's just the first wave, so be ready. Okay, so here's today's price action in the yellow box. Opened near yesterday's close and then tested a little bit higher and then was weak going into the weekend. Stayed in the dragon, though. It was kind of an inside day. This is a wait-and-see market. Good news is it didn't fail. Bad news is it didn't gain, so the tension is going to increase. You can see the PSAR just still marching forward. We're still well into the spring, in the middle of the Red River. We don't have the long bias yet, but at least it didn't fail prior to the weekend. It closed below Monday's open, so it was a negative net week. But to me, it was less than a 50% retracement, so that's something positive anyway. So here's the 10-day high and 10-day low and the 30-day low and the 30-day high. So we are at about 31% sell-off compared to the swing high. Yeah, Lisa, I think it's just you. Let's see. We have the all-time swing high, peak of the dragon, peak of the RL10 here. We have Z plus 3. We have the long-term fair value with the RL270, Z1. Bollinger Band mean and the RL90 are simultaneous here. The 10-day high and the peak of the RL10 are about the same level. Here we have the 1-day low, the Z-1, which is almost the skin of the dragon. We have the belly of the dragon here, which we're saying is a really significant price level because that was the weekly swing low. Stand by. We get 35 people tonight. Well done. All right, so the belly of the dragon is the key support level here at 236. Belly of the RL10 at 223, and then the this goes back a couple years at 218. So cautiously optimistic here. Didn't fail. The news this weekend is not going to be good, though. So I've got some concerns on that one. Looking at the way the sectors ended up today, we've got oil sector, so USO and Devon Energy, Simon Property Group, Tesla, Boeing and Walmart came back, Cliff and Treasuries. Here's the S&P down 1.5%. Down at the bottom of the stack, Wynn, Virgin Galactic, Brazil, Mexico, U.S. Steel, Timber. So some real problems in here. When we get to the speed run, we're going to see that this SCO, which is the triple inverse of oil, that was down 29% today. I guess it's a double inverse. Seems like it should be triple. It was down 30%, and USO was up 15%. This I played this as a swing trade, but it was such a good one-day play that I just decided to take it. Okay, so here's the Friday night report for Monday. We've already talked the health check. So we are still in bearish volatile. We're in the middle and low end of the NDX. Red bearish on the percent stretch, minus 17%, below the 200-day moving average. Risk Z is risk off at 0.949. The Z-score is minus 0.57, so we've come all the way from 4 sigma to half a sigma, so the swing side is still cautiously optimistic. You can see the NDX is rolled over here. The standard deviation of the gaps is 1.5. The biggest single gap in the last 200 days has been favorable 6% and a negative minus 10.45%. So that's just how volatile things are. Average move in the S&P at 1.5% is double the average size that it was 6 months ago, just so you know. No signals in the channeling and overreaction. Tactical summary. Plenty of dojis today. Not surprising that the market was like that today. Lots of autoframers are setting up. Now, this is why you're starting to see a lot of autoframers. We're still a considerable distance away from the 10-day high for many of these symbols that have been lagging behind the market itself. And the relatively low volatility and the low range from today makes the range risk very small, so then you can start seeing pretty good multiples just to the 10-day high. Well, that's why we are seeing many of those speed run symbols, like Japan especially, set up for nice breakouts in either direction. So you're getting that coiled spring effect, and there's a large move implied in either direction since we're in bearish volatile. This is actually the most perfect conditions of all in order to do hybrid trading, starting with an intraday turbo position. Begin with the hybrid frog, and then if you get a strong directional day, then convert a piece of that into a core position for the swing. I would recommend only about 1/5, and the reason for that is that the day-to-day shift in directions is significant enough, and the overnight gaps have been large enough that you don't really want to take on all of that extra risk. Now, that's one of the reasons to be interested in the Forex course that Dr. Morrison and the gang are fighting their way through right now. But that's the kind of market that when you see that many dojis and this many autoframers testing out well, then you want to sort of take notice of that. American Express is very interesting because that's the only one in the Dow 30 that has a single-digit RSI too. So that is really sold off sharply and was down 4% today. In the ETF 30s, not as many dojis. Still a considerable number of autoframers that are doing pretty well. Mexico, to me, is a very nice play. It is the only one that has a single-digit RSI2. If TradeStation was cooperating with us, we would see a much better short on that one than almost any other ETF because it's at the bottom end of its swing and it closed poorly. Okay, so lots of negative moves out there. Oil, just look at this roller coaster. Over the last month, it's down 40%. But in the last day, it was up 15% and 20% over the last 10 days. So that's about as wild as you could ever want to see. Let's see, next one up here. The pinch and stretch. We're starting to see more pinches. And the negative Z stretches are now under 3. Even the worst one is under 3. But you can see how bad Mexico and American Express are. They're the furthest ones under their Bollinger Band mean. So it's not surprising that when we go back and look, we see Mexico with an RSI value of 2 and AXP with an RSI value of 4. That's just how bad they are. So in their own little populations, those have the least relative strength. The most expanded pinch box example there for EWW, and I'm also going to say IYR, which is real estate, they are both deeply out of their river, and their pinch boxes are extraordinarily wide. What that means is that they have both experienced an extraordinary adverse directional swing move. So that's the way to keep playing those, is if they're going in that direction on weekdays in the market, you can be piling on those things. And that's been the case for both of those symbols. I was hoping we could get in the background to show that, but it's not cooperating. All right, moving on. The Autoframer, there's 15 symbols that are better than 2-to-1 on a retest of the 10-day high, just using the range risk. So that's one that's, these are all the mechanical framing prices that if you were looking to set those up, you could go take a quick look, let the computer do the work for you. Inside the regression line fractal framework, the deepest value plays are on the top shelf here. So Boeing is 6.5 ATRs below its long-term fair value. So Boeing, JP Morgan, American Express, 4.5. And then in the ETFs, Brazil, Mexico, Latin America, that's where the weakness is, guys. They're more than 7 ATRs below their long-term fair value. Daily squeezes, there's a lot of them on this one today. And again, that's because the volatility has been high for the last 14 days. But today's ranges were relatively small. So that sets up ideal conditions for a breakout from a range compression in either direction. If you think back to that couple trades I just framed there with Cisco and Japan, that's a perfect example of what that looks like. And notice, here's Japan in the 5th position right now. It's got almost 3-to-1 reward to risk because it's so tightly compressed. Okay. Most everything is in the spring now. A couple things in the summer, treasuries and gold. And so when that is the case, I like looking for the things that are already well out of their river or have the highest Z-scores. So that leads me to look at like Pfizer, Cisco, Intel, Caterpillar. And then in the ETFs, I would be looking at Japan, EFA, technology, and healthcare. You'll see those in the speed run when we finish that up. MultiTime Frame, NDX, Walmart, and Pfizer in good shape. All of these that are in the green for the 10-day look back and the green for the 3-day look back, that's where their most current relative strength is. Consumer staples, oil, gold. And then the big things that got smashed today was AXP is just as bad as it can be. I mean, it just, on every look back period, and today it collapsed. So that would be on my short list of things that I want to get short on Monday if there's market weakness. In the market mosaic, you can see things stalling. The slope stack continues to improve as the rate of failure declines. The stretch stat is pausing after a nice almost 2 sigma move off the bottom. So that's not an unnatural act. And that's everything I want to cover on the daily. Okay. We're 50 minutes into this thing, fiddling around so much with the speed run, and I apologize for that. So let's get into the trading case studies. All right, so this one is Wynn Resorts. I'm going to go through this trade by trade. I'm not going to get all the cut and thrust of each and every one of those per se, but so just as you know, I'll go trade by trade. So that first, I noticed it was a slight gap down, and the VWAP is up high. Let me get my my cursor here. Sells off, and that was a hybrid frog distance. That was like $1.50. So I went ahead and got short when it violated Z3. It rolled over and started back across the dragon, so I took that fractional loss. It's about half an hour of execution. At 3, I noticed that the volatility was still increasing, but it had started. The PSAR had flipped and was rolling up. It got to the edge of the dragon, could not penetrate the PSAR any further, and then everything started rolling over again. And now at 5, we have a collapsing dragon when it breaks below the previous Z3 and the RL10. So that's short at 5. Second position on a collapsing dragon. And at 6, it crosses back. It had 2 or 3 chances to where it was coming up and really testing. So by this time the RL10 had reversed, so I just took that one, 2 positions, and covered. Got long at 7 when price crossed the Bollinger Band mean. Then it failed immediately, so fractional loss. Collapsing dragon at 8. Got short again as it was testing this line. Let me try my line here. Learned that yesterday. So you just draw that line across from the belly of the dragon and the RL10. When that price rolls over, then it's short at 8. Another collapsing dragon, short at 10. Now I'm noticing up here at 9, I'm starting to notice the distance back to the VWAP. So that's how far the traders have been able to push this price down. And if we look over on the right-hand side, that's from the VWAP's at 51. Price down here is at 49. So it's a 4% move away from the VWAP. And now you can see the RL90 has started coming. Now, the other things that I'm drawing for future references is the hump of that dragon is that purple line. That's going to look like a resistance level later on. This hump of the dragon right in here is resistance. And then the peak of the dragon here is going to be resistance. So those are all going to be price targets on the way up if this thing starts working. So there we are. So now we're short 2. We get the, that was enough. There wasn't much money in hand on that one, and didn't want to stick around. At 11, I noticed the Bollinger Bands are starting to collapse again. So it's starting to get range compression. At 12, the RL270 and the 90 and the 30 and the 10 are all within a pretty tight band. This is becoming a super pinch now because it's only about $1 from Z3 to Z3. So we're kind of in that super pinch. I now have a, no directional bias. At 13, the pinch gets tighter and gets short when it collapses out of the Z3. Now you notice the RL90 starting to roll over. So now we're short at 13. Second position at 14. Feeling pretty good about that one. Feels like it's running out of steam. So by this time, as it's running out of steam, my thought process is this. I'm going to put a line here at the Z. See how the Z3 line is starting to expand? And this is getting ready to fail. So if it breaks another inch lower, I'm going to add a third position down here. But if it breaks up, I'm not going to, probably by the, not later than the purple line, or maybe break even on the red dot, I'm going to exit that one. And I don't remember what happened after this one, but that's sort of the cut and thrust inside Wynn. How did I know? Lisa, I just do it, and then I total it up later. 15 different reasons. I'm in the moment, and there's 3 or 5 different positions open, and the market was failing. So I stay in at 8. Yes, how do I know to stay in after 8 at the RLCO? Because the whole market was collapsing. There were only 3 things that were positive, and Wynn was one of the worst things ever. And it's been down huge so far today. So if I was ever going to risk staying around short, I'd stay on that one. Okay, so next one is Brazil. So one, I noticed the gap down on Brazil. Try to go through this a little quicker. Collapsing dragon at 2, short. Remember, the whole market sucks right now. VWAP is declining. The RL90 is declining. 3 is a second collapsing dragon. That's just, why not? Looks like it's accelerating. At 4, a third position short. At 5, couldn't take it anymore. Money management, cash. Try along. It's now, that's like an owl on the second leg up. Fails. Fractional loss. Short on a collapsing dragon at 8 when it takes out the previous belly at 5. So I'm short at 8. Second position short at 9. Cash at 10. Just felt correct. We're now starting to get later in the day, approaching lunch. Bird in the hand, worth 2 in the bush. Short on a collapsing dragon. Maybe that's a pocket. Everything in the market was slowing down, so take a little fractional gain. 13, feels like an owl, long at 13. Failed at 14. It was supposed to go to 14 and test the VWAP, and now you can see those purple lines where I've drawn the previous resistances. If this owl from 13 is going to work, it should get up there, but it didn't. It started to fail, so get out. But then it tries again like an emerging dragon, so long. So that took about 3 minutes. Happens all the time. Now it's getting across. Is it going to get across? No, it's getting that. So I get out of this thing pretty shortly hereafter, like probably with a scratch right around there, because it tested the VWAP and then started to fail, and now it's about 1 p.m. on a Friday, and this is not a market that is failing. This is a market that has general downward tendencies, but oil was up huge, but everything else was just decaying, so this is, I was running out of steam on this one. There just wasn't much more to do. All right, here's U.S. Steel as part of our ongoing U.S. Steel saga. We've been swinging and day trading this one. So hybrid frog off the low, long at 1, and cash the reversal. So that's about 50% retracement from the high. So that was like a money management stop, and I wanted to get paid. Short at 3 when it crossed the VWAP. Short second position at 4. Covered on the RLXD. Gave back a lot on that one. Was mad. I'm noticing a sideways quiet channel developing. Still a good distance away at 6. I noticed the RL90 is starting to, instead of failing, magnificently. It's starting to slow down. All this sideways action is starting to slow down the rate of failure on the 90. And I noticed that the VWAP is still up here also. I noticed the VWAP is up here, so there's some upside. And then this was the previous hump of the dragon, and then the other hump of the dragon. So there's some upside possibilities in U.S. Steel. Tried long at 7 as it's testing the VWAP. Cash at 8. Market was not really following through. Short at 9 on a crossing of the VWAP to the south side. Second position short on, I treat that like a collapsing dragon in here, if you notice this. Since it's violating that support level, just get short there. Second position. Cash, it had an excursion down to the previous. I want you to notice all of this previous support levels over here. The other place, it never even got down there. This time it started to reverse. Had 2 positions in going into lunch. Just cash it. Tried long. Now, this one is a trade frame. I just want to. Here's how I compute the possible movements here. So on the upside, you see I'm getting long at 12. I see at 13 would be a breakout of like a Z2 or yeah, so Z2 or Z3. So if it got through there, I'd want to get to no lose. 14 would be a Z3 breakout and crossing the RL270. 15 is crossing the VWAP. 16 is crossing the hump of the RL10. 17 is the Z3 excursion. 18 is the previous hump of the dragon. So all of those things are in play today if this thing wants to go. And then on the downside, if it violated through the belly of the dragon, that would be like a collapsing dragon at 12. So that would be the stop and reverse on this long at 13. So 12 would be stop and reverse. 19 would be an additional gain, and then 20 would be another a third position short. So that's what a critical state looks like. It doesn't cost much to find out how wrong I am, but there's a possibility of a large directional move in either direction, and there's enough time in the rest of the day to do it. Thanks for hanging in there, guys. S Dow, so this is the triple inverse Dow. Gap down to the VWAP, sold off. Now at 1, I just notice where the belly of the 10 is. I see a PSAR flip. I see a higher low. Now noticing the compression. I now buy that one because it crossed the, right here, it crosses the VWAP, and there were 2 higher lows, and actually a third higher low, because at 2, the RL10 didn't even get as low as it did here. So 1, 2, 3 higher lows, and crossing the VWAP, so I just try that one at 2. Slight pullback, and then that's like a pocket second position. This one crosses the RLXD on 2 positions, cash at 4. Tried short, which means I'm long UDOW, by the way. Short at 5, scratch. Tried long, scratch. Tried long again, scratch. Tried long again, yay, cash. Rats, should have been short. I got chewed up so much in there that I just didn't have the will. So at 11, we're now, it's now like 1 p.m. So I feel like the tactical morning was over. It was a choppy day. And now the Z3 lines have pinched. I see a breakout above that purple line at 11 would be a significant move to the upside. So I try the Z3 breakout or the pocket entry at 12. So really you have a low, a higher low, a third higher low. So that really looks like the same pattern as I got in at 2. Was that at 3 higher lows? So I just get long there with a stop below like Z-1 or the belly of the dragon. Take your pick. I notice at 13 how far away from the VWAP we are. And then that tells me somewhere in here I've got to be exiting. It's either going to work or it's going to exit. And I notice how tightly compressed the Z3 lines are getting. So there's not much more room there in the remaining hour. Now, meanwhile, this one is a new one for us. This is Vulcan Materials. And this comes right out of the infrastructure. I put together this watch list the other day, all the things that are going to be needed to rebuild America. So I went through the materials and the steel makers and all that. And Vulcan Materials, VMC, is a big name in that space. So that and all of the ones on this list are the things that I look at in the rebuild of America. So Vulcan was on there. And then, so this is the first time I traded it. So I noticed the following. This one's easy. None of them are easy. This one wasn't as hard as the other thing. So gap down, hybrid frog, sell off, and then I want you to notice the I wonder if can I zoom that up? Yeah, just so you can see that a little easier. So the belly of the RL10 is here, rolls higher, then breaks down. So this is actually like a collapsing dragon. And I'm just using the top of the RL10 as my stop. So when I come over here and look at that, that's like $1. Okay. So from 105, my short is at 104.50. The risk is 105.50. So that's $1 on that stop. Second collapsing dragon short. Cash. So this is cashing it at something like oh yeah, I can see over here 105.50. So that's $4 on the first position, $2. That's a 6R move of execution. And it does not get more orderly than that. If you don't think Vulcan Materials is now on my short list of favorites, you'd be wrong. So then I try the owl entry and scratch. The rest of the market sucks. Collapsing dragon short. Z3 lines are pinching. Breaks out to the downside. Easy second position short. Hooray. Pinch. Expansion to the short side. Third position short. And cash. So this one, this is all on $1 of risk. So this one was short from 101 to 95. So that's $6 on the first one. It is $4 on the second one and $3 on the third one. So that's 13R plus, what was this one, 6? So there's 20R in Vulcan. So I'm trying not to overthink all those little tactical decisions, Lisa, you asked me about earlier. I mean, you know, whatever. Just make the decision and go. I want to find the ones that are easy, and there's 20. So the market closed like that today. We've already covered that. Plenty of symbols in the Autoframer. Plenty of symbols on the pin on the squeeze play for the breakout there. So I will finish up the speed run, and we'll see how that goes. I'm wondering if maybe the internet connection, because there's so many people logged on, may be slow, and that's why TC2000 isn't working for us. Let me see if there was anything else I wanted to cover. I think that's it. That's about it. Sorry about the discontinuity. Any final questions? We got a few minutes before. We're at 50 minutes right now. So, Martin, are you in New York? with Azure?